Welcome back to the deep dive. Today we are taking the ultimate shortcut right into the strategic brain of a creative powerhouse, Adobe.
Mhm.
We're doing a massive analysis of their Q4 and full fiscal year 2025 results, which just dropped on December 10th.
And this isn't just an earnings report,
Yeah.
it's really a detailed map. It shows how a dominant software company is spending its immense resources to cement its lead in the age of AI.
Exactly. So our mission today is to unpack how Adobe's aggressive pivot is working out. It's not just about generating content with AI.
Which we all know as Firefly.
Right. But it's about creating these sophisticated workflow assistants, what they're calling agentic experiences.
And that's what's fundamentally driving their financial performance.
So if you listen to nothing else, listen to this. The entire strategic narrative of this whole deep dive, it's really captured in one single, newly critical metric.
And that metric is AI-influenced annualized recurring revenue, or ARR. Adobe's now actually reporting this.
Which is huge.
It is. They're saying this AI-driven revenue stream is now clearly influencing over 1/3 of their total business.
Yeah.
That's just staggering.
It means AI is no longer some, peripheral feature they're testing.
No, it's the core engine. It's the validated strategy that's driving their growth and, frankly, where they're putting all their money.
Okay, so let's unpack that engine first. Looking at the full fiscal year 2025, which ended November 28th, the company hit some tremendous record numbers.
It really did.
Total revenue climbed to $23.77 billion. That's 11% year-over-year growth.
And what's fascinating about that growth is how efficient it is. I mean, think about it. They're pouring billions into training these massive models, which is incredibly expensive work. And yet their non-GAAP earnings per share still hit $20.94, a 14% year-over-year increase. It just shows incredible financial discipline behind this huge strategic push.
And the lifeblood of any subscription business is its recurring revenue. That total Adobe ARR, it exited the year really strong at $25.20 billion.
An 11.5% increase year-over-year.
But the key to their confidence, to their ability to spend so much on AI, is the capital they have internally.
Yes, that's the piece that gets glossed over in the headlines. They generated record operating cash flows, over $10.03 billion during the year.
$10 billion.
I mean, think about that number. That's $10 billion of internal funding they can use to de-risk these heavy investments in foundation models, in talent, in infrastructure, all while still delivering impressive EPS growth.
So that cash flow is their competitive moat.
It's their entire moat in the AI arms race, exactly.
And that financial muscle is what allows them to move so much faster, so much more aggressively than smaller rivals. And we're seeing that strength translate into enterprise commitment, right?
Absolutely. We're seeing major momentum at the highest level. In Q4 alone, they reported record bookings for deals over $1 million.
Okay.
But the stickiness, the real sign that enterprises are buying into the whole platform and not just a single product. It's that the number of customers paying Adobe $10 million or more in ARR grew 25% year-over-year. That group is now over 150 of the world's biggest companies. When clients commit at that scale, they are locking into the entire AI vision.
That kind of deep enterprise integration, it tells us the strategy is sound. And that strategy is all about tailoring their AI for three very distinct, massive customer groups.
This is where they really excel. It's not a one-size-fits-all approach.
Yeah.
The innovation is carefully packaged for the end user.
Right. So first, you've got the business professionals and consumers. This is your Acrobat and Express user base. For them, the focus is on AI-driven, quick, easy applications for productivity. Documents, simple designs, efficiency.
And then the second group, the traditional base.
The creators and creative professionals. This is Creative Cloud. They need comprehensive power, precision, taking a complex idea from just an idea to a final high-res delivery.
And then the third group is where the really big enterprise budgets live, marketing professionals.
Right.
This audience needs tools for what Adobe calls customer experience orchestration and optimizing that whole content supply chain.
Which in plain English means?
It means how do global brands manage generating thousands of variations of content and then delivering the right personalized experience at a massive, massive scale.
That sounds like a lot of heavy lifting. What's the actual tech foundation that lets them serve all three of these groups at once?
Well, it really relies on integrating two massive technological pillars. The first, which I think we all get, are the generative AI models like Firefly. They create content, images, text, video.
Okay.
But the second pillar is what they call the agentic experiences. And if generative AI is the hand that draws the picture, the agentic experience is the brain that manages the whole project.
So these are conversational interfaces that can automate complex workflows.
Precisely. They manage the process. Think of the Acrobat AI assistant. You don't ask it to write a new document. You ask it to synthesize a stack of 10 legal documents and answer a complex question based on that synthesized knowledge.
It's moving beyond being just a tool to becoming a workflow manager.
Exactly. And importantly, they're making sure it's available everywhere by forging these big partnerships across all the major AI ecosystems: AWS, Azure, Google, Gemini, Microsoft Copilot, OpenAI. They want their agents to work wherever you do.
And this is where we see that strategy really hit the pavement. Let's start with the business professionals and consumers. This group, powered by Acrobat and Express, saw huge subscription revenue.
It was $1.72 billion in Q4, 15% year-over-year growth. Acrobat is the secret sauce here.
It has to be.
It absolutely is. Adobe introduced the Acrobat AI assistant in FY2024 to help users, understand documents faster, and the adoption has just been explosive. The usage of AI features inside Acrobat and Reader grew more than 4 times year-over-year.
4 times?
Yeah. That's a clear sign that when you make a core productivity task that much easier, users flock to it instantly.
And they're building on that with new features like PDF spaces. What does that actually look like in practice?
PDF Spaces is a game changer for collaborative knowledge work. So instead of just linking to static files in a folder, you can create a knowledge hub. It's a single collaborative conversational experience across multiple linked documents and file types.
So you could have a project with, say, 20 linked engineering specs, marketing plans, legal briefs.
Exactly. And instead of you manually cross-referencing everything, you can just ask PDF Spaces a complex question, and it draws real-time answers from across that entire linked universe.
That turns a static folder into an active, intelligent resource. And speaking of active, Adobe Express is also getting a huge AI integration. They're talking about a post-template world.
That's a bold claim, isn't it? A post-template world.
It is.
It suggests design is no longer about picking a basic shell and filling it in. Instead, the Express AI assistant can conversationally generate and edit complex assets, presentations, flyers, whatever, based purely on natural language prompts.
So does that mean the need for skilled designers goes down, or do their jobs just change?
The report suggests their jobs just change. It shifts the burden of all that tedious, repetitive work like making 50 different social media banner sizes to the AI agent. The professional's job pivots to high-level strategy and polishing, while the business user can handle most of their daily needs on their own.
And the scale they're achieving proves it's working.
Oh, absolutely.
Right.
Monthly active users of Acrobat plus Express, it just surpassed 750 million. That's up 20% year over year. That massive, sticky installed base is Adobe's best competitive advantage in rolling out new AI.
Let's talk about enterprise commitment to this new model, because a lot of those users are on huge corporate contracts.
They are. And the metric that really points to enterprise conviction is the reception of Acrobat Studio. This is the unified offering that combines the AI assistant, PDF Spaces, and Express.
Okay.
Nearly 50% of the Acrobat commercial enterprise term license agreements, what they call ETLAs, that renewed in Q4 already upgraded to this new studio offering.
Hold on, let's just clarify for our listeners. An ETLA is basically a massive company-wide subscription that usually lasts for several years.
Right.
So seeing 50% of those large contracts upgrade immediately, that signals deep executive trust in these new AI features.
It's total validation. They see the productivity gains, and they're willing to pay for them. And quickly.
Okay, let's pivot away from the casual user and move to the creators and creative professionals. This is the core digital media segment. It exited the quarter at $19.2 billion in ARR.
With solid 11.5% year-over-year growth. But the challenge here is different, right?
Yeah.
Professionals demand control, not just convenience.
Exactly.
And that's where their multi-model strategy comes in. Adobe knows they can't be the only source of innovation. They have their own commercially safe Firefly models, like the new Firefly Image 5 with its native 4-megapixel resolution. But they're also actively integrating over 25 leading partner models, from Google, OpenAI, Luma, Runway, directly into their apps. It gives pros the ultimate choice and flexibility.
And the monetization engine here is the generative credits. That's what turns all this usage into revenue. They said credit consumption increased 3 times quarter over quarter.
A tripling.
That velocity is unbelievable. But is a metric like that sustainable? Is that momentum coming from paying customers or just, discounted pilots? What does the report say about the yield per credit?
The report implies it's very sustainable because the growth is coming from high-value enterprise use cases. That tripling of credit consumption, it just underscores that professionals are adopting these new AI workflows aggressively, especially for content volume and speed. And a lot of that is moving through Firefly Foundry.
Let's talk about Firefly Foundry. Why is having a proprietary model capability so crucial for big brands?
It's all about brand safety and consistency. Firefly Foundry lets enterprises create their own foundation models, trained only on their own content and brand catalogs.
Ah, so it's a walled garden.
It's a perfect walled garden. If you're a massive bank or a pharma company, you can't risk generating images or text that violate brand guidelines or expose you to IP liability. The Foundry lets them scale content production while keeping that strict proprietary consistency. It's a very high-value, defensible solution.
It really seems like they're targeting every single level of creation, from the massive enterprise all the way down to the next generation of creators.
Exactly. The launch of Premiere Mobile is a perfect example. It has deep integration with YouTube, specifically to streamline remixing YouTube Shorts.
Which sees, what, 200 billion daily views?
An unbelievable market opportunity. And that combination of Firefly, Express, and Premiere Mobile is clearly working to attract new users. Their freemium MAU for these offerings surpassed 70 million in Q4. That's over 35% growth year over year.
Which, of course, ensures a continuous feeder stream into their paid subscription tiers.
Hmm?
So now we shift to the third pillar, marketing professionals and the digital experience segment. That brought in $5.86 billion in FY2025 revenue. Their big goal here is customer experience orchestration. They're a complex piece of jargon.
It is. What it means for a marketer is moving beyond these scheduled, segment-based campaigns to true, real-time, one-to-one personalization.
So you're orchestrating the customer journey.
You are, making sure the right content hits the right channel at the exact right moment. And the foundation for this is the Adobe Experience Platform, or AEP. The scale is just staggering. It handles over 35 trillion segment evaluations and 70 billion profile activations every single day.
35 trillion daily. That's the level of complexity that really separates market leaders from everyone else.
And that demand is showing up in the finances. AEP and its native apps subscription revenue grew over 40% year over year. It just reinforces their leadership in high-end marketing tech.
But the whole marketing world is facing this massive shift because of AI, which Adobe is calling the agentic web.
This is the critical piece of the puzzle. The agentic web is all about the rise of AI-powered traffic from LLMs and conversational assistants.
AI agents that are making discovery decisions for users.
And often bypassing traditional search pages entirely. The Adobe Digital Index data showed that generative AI traffic was up an astonishing 760% during the 2025 holiday season.
760%. So marketers aren't just fighting for a top spot on Google anymore. They're fighting to be relevant to an AI agent that's making the recommendation for you.
Precisely. This fundamental shift is why they announced their intent to acquire Semrush for about $1.9 billion. Brand relevance is changing. Semrush's expertise in SEO and specifically optimization for generative engines is meant to deliver a comprehensive solution. It helps brands control how their story gets told across all these different AIs.
And their own internal solution for this, GenStudio, is also seeing great traction.
Yes. GenStudio is built specifically for this new reality, for the content supply chain of the agentic web. Its ending ARR grew over 25% year over year.
So the demand is there.
The demand is intense. They secured over 50 new customers in Q4 alone for new offerings like their LLM Optimizer and Brand Concierge. That is extremely rapid market acceptance.
So if this past fiscal year was about establishing the AI foundation, what does Adobe expect for the coming year? Let's look ahead to their FY 2026 targets.
The company is exceptionally confident and is fueled by the validated strategy we just walked through. They're projecting the highest beginning-of-year guide for total net new ARR in the company's history.
Wow.
They're targeting total revenue between $25.90 and $26.1 billion. And crucially, these figures exclude any contribution from that pending Semrush acquisition.
And what's the growth target for that core recurring revenue?
Total Adobe ending ARR growth is targeted at 10.2% year over year. Now, that might sound a little lower than the 11.5% they just hit, but it translates to about $2.6 billion of growth. They believe that combination of global demand, disciplined execution, and their clear leadership in AI will drive that result.
And the EPS target reflects that confidence.
It does. So between $23.30 and $23.50.
So it's clear the financial strength, especially that massive cash flow we talked about, it de-risks this whole ambitious growth path. They're basically paying for their own AI revolution.
They certainly are. And the key takeaway from this whole report is that Adobe's results, they provide absolute validation of their strategy. They're embedding AI deeply, and they're turning their applications from simple tools into true workflow agents.
Capable of massive automation and productivity gains for every single user.
For everyone.
And that brings us to our final thought for you, the learner.
Well, what stands out most starkly here is that transition. The move from just providing tools to providing agents. We saw the consumption of generative credits triple quarter over quarter. That tells you that speed and volume and customization are now paramount. So as these conversational platforms and AI assistants start handling more creative and document tasks, from refining images to synthesizing huge stacks of financial reports, the critical question for you, the knowledge seeker, becomes, how do you learn to orchestrate these agents?
Right.
You have to move from being a user of a single tool to becoming a conductor who manages an orchestra of AI assistants. That's how you'll achieve true, repeatable personalization and efficiency at scale, rather than just using them for one-off tasks.
The future of professional work isn't about using a single application. It's about mastering the art of the AI orchestra. That is a powerful idea to chew on as you process this deep dive. Thank you for joining us for this analysis of Adobe's enterprise AI strategy.
We'll see you next time.